I guess first off, just when you look at broadly what happened this week, do you think the central banks delivered what investors wanted, or would it have been impossible given the lack of visibility out there and what seems to be worsening economic fundamentals day after day?
Look, I think it's a tale of two different central banks. You have specifically the Fed and the ECB grabbing all the headlines, and I think the Fed is winning the battle. What you're seeing from the Fed is a continuing upsizing of current programs that they've already implemented, whether it's the secondary corporate credit facilities, the primary credit facilities, the changes to the Main Street lending programs. They've basically said they're not going to run out of ammunition and have given really an open-ended commitment to fund the economy at pre-coronavirus conditions. Then the other side of the coin, you have the ECB, where, I guess you can kind of quantify it as a bit of a letdown. It had really zero wow factor, and once again kind of proves that the ECB has their head in the sand. And I think while over time it may prove to be a net positive, Christine Lagarde and the ECB didn't really give us a lot of comfort that they're going to backstop the market to the degree that the Fed has committed to. And while they reduced funding costs for banks, they didn't increase the purchasing envelope. They didn't explicitly target fallen angels or anything on the size of the PEPP. So as expected, the ECB tends to talk a good game but can't match the language and action compared to the Fed.
Yeah, that's an interesting point, Nick. I'm wondering, though, when you look at how much of a player the Fed has become and is going to become over the next few months in this market, whether that creates distortions that investors need to be worried about, or is this just simply a matter of just wait for and look for what the Fed's going to do and just follow their lead, more or less?
I think, you know what, Romaine, I think it's a little bit of that. You don't want to fight the Fed, right? That's the standing statement that everybody tends to make, particularly when they're moving interest rates around. But you also need to realize that the Fed really has no choice to pick winners and losers in this. They can't backstop everybody. And while providing liquidity to corporates and Main Street doesn't mean that there won't be any defaults, many companies still have a lot of solvency issues. So there's a growing divide between what's happening in the economy and what's happening with the market. The market function has been solved, but the long-term consequences are likely being discounted too much by the market, because ultimately this pandemic is going to alter consumer behaviors for the foreseeable future, and we don't know the extent of the disruption, how long we'll be sidelined, and the impact on Main Street, because if those disruptions are larger than expected, the difference between 3 and 6 months is very substantial in economic terms. And while the Fed may backstop it, they still have plenty of ammunition in the tank to continue to tighten investment-grade spreads, particularly with the new facilities that they put in place. They can be buying up to about $2 billion a day in the secondary market to reach that full size by the end of September. Then you throw in the primary corporate credit facility, and they have a ton of room that they can work with as well.